Hi, good afternoon, everyone, and thank you for joining us today for discussion about small business finance. I'm Claire O'Hara, a business reporter with the Globe and Mail, and I'll be moderating today's discussion. I just wanted to go through a few footnotes first. If you're experiencing technical difficulties, please enter your question to the tech support and Q&A box, and your question will be answered as soon as possible. If you have a question for today's speakers, please type it into the Q&A box on this webcast, and we'll take a few of your questions closer to the end of today's discussion. Everyone who registered for this webcast is going to receive a link to the recorded version so you can view the event again at your convenience. And the recording should be ready in about a week. During today's cast, we're going to explore some of the challenges small businesses are facing related to financing, along with strategies and solutions. We have a great lineup of speakers today to cover all these issues, so let's go ahead and introduce them. First off, we have Vivian Kay, the founder and CEO of Kinky Curly Yaki, one of the premier textured hair extension brands for Black women, disrupting a $6 billion industry. Vivian overcame the challenges of running a multi-million-dollar e-commerce empire while balancing life as a single mom. She's also a coach and mentor to other entrepreneurs. Welcome, Vivian.
Thank you for having me.
Next, we have Jaime Galumbeck, Managing Director of Tax and Estate Planning with CIBC in Toronto. As a member of the CIBC Private Wealth Management team, Jaime works closely with advisors from across CIBC to support their clients and deliver integrated financial planning and advisory solutions. Welcome, Jaime.
Pleasure.
Also joining us today is Brandy Svensson, CEO and co-founder of Be the Change Group, Inc., a global public health consulting firm in Vancouver. She co-founded the company in 2012, and in today's discussion, we'll reflect on the company's financing journey and approaches. Welcome, Brandy.
Thank you. Nice to be here.
We're also pleased to have Jason Pereira joining us today. Jason's an award-winning financial planner, portfolio manager, entrepreneur, and lecturer. His core focus at his firm, Woodgate Financial, is working with business owners to help them manage their personal and business finances. Welcome, everyone, for the panel. Great. So our clock is ticking away, so I'm going to just jump in right to our discussion. And Vivian, I wanted to start with you because when we spoke earlier this week, you mentioned how women-owned businesses right now are really falling through the cracks during the pandemic. So I wanted to hear a little bit of your insight on that.
Not only women-owned businesses, not only women-owned businesses, but I would say just businesses that aren't traditional in, the whole brick and mortar form or traditional service format. My business operates online, and a lot of people that I know who also run online businesses don't necessarily have traditional employees, people that they have on payroll. So what we do have are people that we who are contractors. So we outsource parts of our business to, but because we outsource, they're not counted on payroll. So some of us, I know for myself, even though I run $1 million business, I barely made it into the government. The one of the I forget what it was called, not CERB, but the one that was available for businesses for that $40,000. I barely made it, only because I would say if I have 5 people working on my team, only 2 of them are on payroll, and they only work part-time, and the rest are all contractors. So there's a lot of businesses that have fallen through the cracks, and it's because they need to update what their understanding of a business is, especially now in 2020.
Right. One of the things you pointed out, it's important to acknowledge that small businesses, there's a lot of challenges, as you sort of pointed out, around financing. And you founded a disruptive company that really scaled quickly. You mentioned it was online, and it was something you were kind of doing while juggling a newborn. And you saw $500,000 in sales in your first year. So can you walk us through a bit of your financing story of what happened when you accelerated so quickly in that environment?
Well, the funny thing, I didn't have any outside capital, so I didn't go to a bank to start the business. I literally someone would buy one product, I would take the profit and buy 2. So I started it from zero. And what happened to me was, instead of the bank contacting me and saying, hey, we're seeing all this money come in and out, maybe we can help you grow your business and scale your business. Instead, they kept asking me where the money was coming from and where's it going. And it was like, okay, well, this is what I do, and this is what I'm doing, and this is why I have so much money. Okay. And, every 3 months I would get this phone call, but I have yet to get a phone call from the bank saying, hey, we would love to help you grow your business. We'd love to offer you a line of credit. And it's only because they didn't understand the business I was running. They didn't understand the demographic I was serving. They didn't understand that people were making money online.
Right. So did you have to go to the bank and show them some sort of proof, or how did you end up getting something beyond just the dollars you were getting for product? Did you end up getting some sort of financing from not that they offered it to you, but that you had to go and seek it?
Well, yeah, I hired an accountant who specialized in e-commerce business. And, I live out in Hamilton. But at the time I started the business, I lived in Mississauga. But when I moved out to Hamilton and I had a newborn, I didn't have time to, run to the bank and run after the bank to help me with funding. So I had actually hired an accountant who specialized in e-commerce. And he reached out to a guy that he knew at a bank in downtown Toronto, a branch. And he said, listen, one of my clients is making a lot of money. Can you help her out with a line of credit and a credit card? And he was like, yeah, here you go. I was like,
so use your connection, right? Use your connection.
Yeah, but it was just interesting that's what had to happen. Like if you can call me to ask me where the money's coming and going, you can probably call and let me know what sort of offerings that you have to help me.
Mm-hmm. Great. Brandy, I just want to jump over to you now. Your company, Be the Change Group, has actually been fairly busy during the pandemic. You have a focus on public health consulting. So I wanted you to sort of walk us through how Be the Change was impacted during the pandemic and how you responded in terms of financing, because you actually did a couple different things around the government grants.
Yeah, absolutely. And I feel like I had a very different experience than you, Vivian. We've been really lucky in the sense that we've had a really strong relationship with a lot of people who support us. So right from the beginning, as you mentioned, we work in public health, but I think in the beginning, everybody just kind of froze, if you will. So our projects that weren't focused on COVID all froze because they were healthcare. So right away, like week one, we just really reached out to our professional team. So we have a really good relationship with our financial advisor from the beginning. And I think, Vivian, similar to you, we often have to explain who we are and what we do. So we had that great relationship right out the gate. We have a great accountant and an HR lawyer. So like right from week one, we called all three and we're like, what should we be doing? And of course, they were just figuring it out too. But right away, we doubled our operating line of credit just to get prepared. We got that $40,000 again, just to put it in our savings, make sure we're prepared. And of course, when wage subsidy came up, we accessed wage subsidy right away. And we actually decided to hire because we figured it's basically 5 or 6 months of, I don't want to say free labor, but cheaper labor, and give us the opportunity to focus on shifting and pivoting our business development, because we started to do pandemic policies for workplace and back to work and second wave stuff. So that was like our biggest focus, and we felt really supported. But I think a lot of entrepreneurs are afraid to reach out to their lawyer or their accountant or even their financial advisor. But I think that was a big part, because I felt like we were part of a team. And then they kept us advised when new opportunities came up.
Mm-hmm. And so speaking of financial planners, Jason, I'll jump over to you, because some of these stories you're hearing from the entrepreneurs are probably very familiar to you and your clients. You help small business owners directly with their finances. So what have you seen in the small business community through the pandemic, and what kind of questions are you hearing from them?
So Vivian, I must say, when you were chatting, I was actually kind of chuckling a little bit, not because I share your frustration both as a business owner and as someone who's had to coach a lot of clients through that. So I'd say that the business owner communities, it's diverse, right? Everybody's fallen along the spectrum of, we literally had to shut everything down, to we just happened to be in this spot in the economy or the service offering that's actually flourishing right now. So I've seen everything from people who are having their best years ever to people who are just waiting to reopen. But a lot of it, this always came down to financing, because at the end of the day, the lifeblood of any business is cash. And if you didn't have those proactive relationships that Brandy previously had, that were able to be reinforced at this time, that was difficult. Also, if you weren't of a certain scale, You fall into different categories of service with banks, which makes it difficult. And I echo what Vivian said about the bank's view of just general lines of business. They have a very Norman Rockwell-like view of the world in terms of expecting there to be bricks and mortar, expecting there to be manufacturing. When you're in knowledge work, you don't have those things to leverage against, and it can be difficult. And this is why a lot of newer financial institutions or fintechs have come into the space to disrupt this space, the likes of Clearbank or Lending Loop, where everything from vendor financing on receivables to peer-to-peer lending for small business. I've actually found those experiences far superior customer service wise than a bank who's trying to cover off as many things as possible. And that's just my experience. So it can be a vital relationship to jump on if you've got it and reinforce. If you don't, you have to go through the alternatives. And really what was happening with these business owners, and you guys, the two of you can echo this, and myself as well, it's like, okay, the world is falling down around me. I've got to worry about not just normal operations of my business. Am I going to have a business? Am I going to basically be able to pay payroll? Those are, a business owner is on an island at the best of times. This was really, really difficult for most of them and isolating. So having, my function, which was largely making sure that they were aware of the programs that were coming down the pipe, updating them constantly, because there was like a 3-week period there where there was a news announcement every day from the podium. Making sure that they were updated on the ever-changing policies and trying to get, checking that website from Finance Canada like every 30 minutes to look for updates. That was a powerful couple of weeks in terms of building relationships. But there was so your question was pretty loaded. I've seen everything. I've seen every end of the spectrum right now, from struggle to success.
And is that continuing as we're sort of, past the 100-day mark of this pandemic? Are we still seeing a bit of entrepreneurs or small businesses struggling or still trying to navigate some of this stuff?
I would say yes. It depends. Like, go back to the spectrum I talked about before. Somewhere in the middle were the businesses that could adapt based on what they did to work from home or to shift to selling stuff online to make up at least part of the sales, for example. And that's forced a lot of people to, again, this is why Shopify is so expensive now as a stock, is because, we're also going to turn for help on this. So there was a big segment of the economy that was able to adapt and either get back to baseline better or, worse, but still getting cash flow. The more traditional, bricks and mortar type services, hairdressers, for example, restaurants, they're just holding on for dear life right now still.
Right. Great. So I want to jump over to Jaime. You're with CIBC. You're kind of the tax guru, as we all know you, and probably know these government programs in and out more than anyone at this point. But as Jason pointed out, they really were just sort of coming out. The news was changing, and it was even confusing for the tax experts to get through. So maybe you can give a little rundown on what these programs are and the impact of how they're helping these small businesses.
Well, absolutely. And I think we'll start, of course, with the program that Vivian was mentioning, which was so challenging. And of course, the government had to change the rules midway. And of course, that's the Canada Emergency Business Account. That's the $40,000 loan that's available for businesses, of which $10,000 or 25% can be forgivable as long as it's paid back by the end of 2022. For many businesses, that was the lifeline. Yet many businesses simply didn't qualify. And that's because the original rules said that you had to have payroll between $20,000 and $1.5 million based on the T4 summary. And if you didn't have employees, like Vivian, if you had independent contractors, you had part-time employees, you didn't have the payroll, and it was a problem. So they've recently changed the rules so that hopefully more businesses can qualify. So effectively, right now, the payroll, even if your payroll is below $20,000, if you can prove that you've got, let's say, $40,000 of non-deferrable expenses. So things like rent and property taxes, utilities, insurance, then you can qualify. So we found in our experience that that's been the number one lifeline for many qualifying businesses to get that $40,000 in cash. And as Brandy said, even if you don't need it right away, you've got it in that account, and then you can use that certain emergency. So that's the big one. In addition to that, of course, as was also mentioned, the CEWS, the Canada Emergency Wage Subsidy. Again, the rules are complicated. And I would say if you haven't yet applied, speak to your accountants about it because it's not for the faint of heart. They do change the rules very often. But this is a substantial subsidy, and it can basically give you, I think as Brandy was saying, free work, depending on what you pay them. So in other words, 75% wage subsidy, there are certain limits. You have to have a decline in revenue of 30%, and there's different measurement periods. So there are some technical rules. But for many businesses, this has been a way to keep employees on the payroll and to keep them engaged. And in fact, the numbers have been significant. We've seen about $13 billion so far of government support in terms of the wage subsidy. And then the final one that I'll just mention briefly, if you qualify, and I'm thinking about the traditional businesses that Jason was talking about, your hairdressers that still in Toronto have not yet opened. I think they're opening tomorrow on Wednesday, so I might have to visit somebody. But I mean, pieces that are basically closed, and that's the commercial Canada Emergency Commercial Rent Assistance Program, where you've seen a revenue decline of 70%. And therefore you may qualify for some rent assistance. Essentially, what happens is that the property owner has to be on board, and they have to be willing to reduce your rent by at least 75% for April, May, and June, and then agree not to evict you as a tenant. So again, this is an opportunity that if you are a tenant and you are more traditional, as Jason was saying, you've got a storefront and you've literally been closed, or you're a restaurant that has not been able to repivot and do online sales and have significant declines in revenue, that's another opportunity. So again, my message is the programs are changing. They are complicated. The queues, the wage subsidy was just extended towards the end of the summer, which is positive news. But again, speak to your accountant, speak to your advisor. There's lots of information available to help you get the help that you need.
Mm-hmm. So you just mentioned there was an extension on one of them, but there are deadlines to these programs. So if a small business owner hasn't applied to it yet, they want to be thinking about that probably, very soon, right?
Absolutely. So some of them expire sort of at the end of the summer. So the rent assistance program, got to apply by the end of the summer. Some of them exist into the fall. So there is opportunities there. But again, you don't want to miss out. You're not too late. You can retroactively go back and claim stuff even from a couple of months ago. But again, keep close contact with your accountant. They're the person that's probably most likely on top of this stuff. They've spent hours and hours of time back in March and April really studying all the rules. And also speak to your financial advisor. If you deal with someone at your local bank, then speak to them, because on the commercial side, on the business banking side, small business, they should be very much on top of the programs and can also share successes that other of their clients have had in trying to get access to these government programs.
Great.
If I can just add to that as well, one great source for us has been our HR law firm. They've been giving daily updates. So if you know one, you can look at their bulletins. They've actually been really good as well.
Great advice. And Brandy, I actually wanted to jump over to you, because I know when we were chatting earlier, you really figured out the ins and outs of the government programs. You mentioned that you quickly applied for the $40,000 loan, not even knowing if you would need it, but you did it anyway. So I wanted to know if you could sort of give it some advice that you might have when you're navigating these programs.
Yeah, well, again, we were really lucky in the sense that we spoke to our financial advisor at our bank, and we knew it was coming. So the day it was available, he reached out to us and we applied the day it came. And we've also been talking to other entrepreneurs. Speaking of the restaurant industry, my business partner and I are investors in a restaurant. So one of the things that we did is we're able to take that $40,000 because it's a lower interest as well. So people should think about that. If you have higher interest loans, you can use that $40,000. Correct me if I'm wrong. I believe it's no interest for the first year. So you can basically defer some interest. So we did that. And I think it was a lot of what everyone's saying. We looked at our lawyers' platform. We spoke to our financial advisor and our accountant. So we really used our professional team. And I think that it seems like it's expensive to use them, but it actually saves a lot of money in the long run. And then same thing with little things that we've been doing is looking at student grants. There's tons of student grants out there. So if you need some extra help or support, there's so many programs that are being really flexible as well. So if you need someone to help for whatever kind of thing, or if you've had to lay off someone, you need some student grant, that's another thing that we looked at as well. And then, as I mentioned, we doubled our operating line of credit just preemptively, just in case.
Great. And so, Vivian, I want to jump back to you in the same question. Were you able to use any of these government programs, and how did you find navigating them for your company?
Well, to be honest, I wasn't aware of them until I reached out to, I was dealing with a coach, and a coach I was looking for resources because my audience, especially for my physical product, which is the hair extensions products, primarily goes to the US. So I need access to US dollars. So in trying to get access to, US funds, he said, have you tried, the government assistance program? And I'm like, well, I didn't qualify because I think at first it was 40,000. You had to have a payroll of a minimum 40,000 to 1.5 million. And I knew I didn't have that. So he said, oh, no, they lowered it literally just today. So, for me, it's been interesting because I'm a mom. So I'm also dealing with my 6-year-old at home. I'm trying to run this business. So I didn't really have the time to just be, watching all the podium speeches to know which things I would qualify for today. Right. So I only happened to notice it or to know about it because I mentioned it to someone. Right. So, and I think that's probably the case with a lot of other business owners. We don't necessarily have, accountants or financial advisors that are on top of this information as well. Right. So it happened by happenstance, and I happened to squeak by. Like I think I had to add $1,000 just to be like, okay, I think. And I was going to ask for, what do you say? When you ask for permission, you ask for forgiveness later.
Right. But it's good. The big lesson here is, like Jaime pointed out, it was changing all the time, and the rules do change. So it is something to follow up. If you asked your advisor, your planner earlier at the beginning of the pandemic, it certainly helps to ask them again to say, has anything changed? And, what can I do at this point? I want to just flip over now. One of the underlying themes that we always hear when we're talking about small businesses is, and finance is debt. There's this real sort of psychological implication when we talk about debt. And I'm hoping, Jason, maybe you can talk a little bit about that and with small business owners and them taking on amount of debts for them to run their companies.
Yeah. I mean, I think there's debt in normal circumstances and there's debt currently, right? And I think I talked about this in the pre-call, how to some people, it's almost as if they're failing when they reach out for debt. That's not that. It's interesting. Having studied business at multiple degrees at universities, there's a real disconnect between the way entrepreneurs look at debt and the way the finance theory works. Like, you go to any finance class and they talk about companies financing themselves with a combination of debt and equity because debt can be rather affordable. And yet most Canadian businesses have a massive aversion to debt. And try to run as debt-free as possible in most cases from what I've seen. There is a healthy amount that will basically help your business flourish. I mean, Vivian, for example, talking about the need to ship product and whatnot, there's a certain amount of debt that can be taken on that's collateralized, say, by her receivables that will just help accelerate growth, right? The line that Brandy mentioned, which, basically acts as security. Like, these are types of debt that can absolutely be beneficial to you, right? And I think there's just too much about us. It's funny. We have this weird thing in Canada. Our debt is out of control right now, but it's not necessarily in the right places, right? Like, in mortgage argument, you can argue about the mortgage. Consumer debt's terrible. When it comes to business debt, you take the right amount on. It can help you grow your business, help you sustain your business, and help you weather the storm that we're going through right now. Because whether it's COVID or something else in the future, no entrepreneur ever had smooth sailing. I mean, have you ever seen those memes online with the way people look at success? It's a straight line. With success is thank you. Maybe it's doing the wave. It is peaks and valleys. And I joke that unfortunately that entrepreneurship is the most bipolar thing you could ever opt into in your life because you will ride those peaks and valleys. And some of that are peaks and valleys that come with money, and debt can be what helps you out at those times.
Great. So speaking of debt, Brandy, I know you and your co-founder, you really operated a lean company, and you said something that stuck out to me is that you were always sort of debt adverse. You didn't like to have any debt. I think you were debt free for a very long time at the beginning of running your company. No. So what's your outlook on debt now? Has it changed through the pandemic?
Yeah, I mean, it has. And I also think it's just changed as we've grown as entrepreneurs. I think definitely I echo that in the beginning. We don't want any debt. We were very lean in the sense that, same as Vivian, we had no staff. It was all contractors. We do consulting as well as creative work. So we're able to do all those professional services. But what we realize is that debt allowed us to grow. I mean, it's that simple. So before we would hire someone when we had enough money to hire them, but we realize if we get the money and that's the operating line of credit or whatever we need to have that staff, we can focus on growth and development and not just the project work and the day-to-day. I still think it's important to have really smart debt. And it's interesting thinking about how I run personally. I have no problems having personal debt, no problem. But professionally, I don't know what the difference is. Like, I'm so lean and fiscally responsible in my company, but not personally. But I find that really focusing on really good debt. And again, and I don't think it's too late too, because we're talking about this pandemic as if it's over, and we work in population health. We're seeing the second waves happening in China and other places. So there's a second wave coming, and there's preparation that needs to happen. And it won't have to be as bad if we prepare in the sense that people can work from home or we can rotate staff. But I think it's important that people still, Vivian, and on everyone who hasn't had those relationships with those people still has those relationships and looks at really smart debt, right? So lower interest. The operating line of credit is awesome. So it just basically works as an overdraft in our account. So when we need it, we use it, and we don't, we just, whenever it just kind of, our account goes back and forth. So I still think it's important to get smart debt. But I think that it's a long-term plan that you need to look at. And I think on our pre-call, someone mentioned, I'm sorry, I can't remember who, that we should still use the same litmus test now as pre-pandemic. And I think that was something that was really interesting as well.
Mm-hmm. So Jaime, I want to get you to weigh in on this, because as business owners reassess their companies, during this whole strange time that we're in right now, what can help them decide whether or not to take on new debt?
Well, I think it all comes down, of course, to the business plan, having a financial plan, and reviewing and updating that plan. Obviously, things are very uncertain now because revenue models are all upside down depending on the type of business that you're in. But I think it's important to have your plan, look at your 6-month plan, your 1-year, your 2-year plan, and look at the amount of debt and how you're going to use that debt to be able to leverage that operating revenue. So the good thing is, and I think all of our panelists have already said, look, we're in a very lowest interest rate environment, if not the lowest ever, if you look at historical interest rates. So the actual cost of the debt is minimal. And of course, you can write it off as a business expense, so it makes it even less, right? Depending on the tax rate in your business. The key, though, of course, is to be able to repay the debt, right? And that's really what could cripple a business later if you're unable to pay back that debt. So that's where it's important to really look at the revenues that are coming in right now, and try to build to the extent that you can based on the reopening plans, based on forecasting and models, where you are in terms of the goal, your revenue goal, your expense goal, margins, are there ways to cut costs here or there? And of course, it's not going to be right because it's impossible right now to predict exactly what's going to happen depending on the type of business. But this is, again, an area where I think you can get help. So whether you work with a financial advisor like Jason, or you work with your banker, or you work with, ideally, an accountant, people who have experience in building sort of forecasting and models and doing sort of some sensitivity analysis, just take a look at what is the effect of paying down this debt. As long as interest rates are low, the cost is basically zero or very close to zero, depending on the rate that you're getting on there. But the key is, in terms of paying back that debt, if it's an operating line, you can carry that debt for a long period of time, but ultimately, is there an opportunity to pay it back? And how does that revenue look in terms of we often say paying down debt should be a line item in a budget. So in other words, when you're budgeting for electricity and rent and all the other things, debt repayment could also be an opportunity. Not right now, if you're in crisis mode, but something that you really want to consider. So having a plan, I think, is the key message I would leave on that point.
Great. And Jaime, very quickly, I want to touch upon, I know when we spoke earlier, you talk about tax strategy for small businesses, especially if they're suffering losses. And I'm wondering if you could just maybe touch upon some of the tax strategies that could help them as well.
Sure. So there's a few things that we often think about. So, one thing is in the case of the value of the business. So, for example, let's say the value of the business has gone down. There's a technique that, many business owners have been using for generations called an estate freeze, where you freeze the value of the business and you issue new shares either to kids that might take over the business or to a management team or a key employee. Well, when the value of the business is lower, it's a lot better time to consider an estate freeze. So, example, right now, if you think that the value of your business has dropped significantly, but of course, hopefully it will go up again one day, maybe now you look at doing an estate freeze, or if you've already done an estate freeze a few years ago and the value has dropped, maybe you do what's called a refreeze, where you refreeze the value so that the future value, when it goes back up, goes to, let's say, a next generation. So that's a strategy people might look at. Another strategy is loss consolidation. So if you've got, let's say, a business with different operating arms, you've got a corporation here that's doing okay from online sales, but you've got another one here that's closed because it's a retail shop. Is there a way of moving losses around? And the CRA is generally pretty generous about some of the planning that you're able to do. So perhaps using intercompany debt to basically move income across, create some revenue in one company, deductibility on the interest expense on the other side to be able to absorb losses. There are certainly some strategies there. And then finally, the stock markets have been rough. They have been volatile. Depending on what you've been invested in, there has been some recovery recently. But depending on the sector that you're in, there may be losses in a portfolio. So again, it may be an opportunity to crystallize some of those losses right now, and then maybe use that to get a refund of capital gains tax or other taxes that you paid in the 3 prior years, or to be able to use that against other gains this year or in a future year. So all these strategies are things that should be discussed, of course, with your tax advisor, and hopefully your accountant would be in a position to share with you some of the ideas, because they go well beyond the scope of sort of what we're talking about today.
Great. Jason, I want to jump over and talk to you about entrepreneurs who are, within the retirement age. Maybe some of them were even looking at retiring, in the next year or two. What have those conversations looked like, and has it impacted them to have to work longer now because of what they've been experiencing right now?
I'm going to give you the classic response to every financial planning question ever is it depends. The reality is that it really depended on the situation beforehand. So I'd say there was general concern and the general assumption that they would all have to work later, put it off, whatever it might be. The good news is, having financial plans in place for all our clients, we were able to, in many ways, assess, without even having to update it, what the impact of that was. How much extra capital was there in their financial plan that would enable them to continue on with the current plans of retirement despite the downturn. We are fortunate enough to deal with a lot of affluent clients, so I would say that the vast majority of them had next to no impact. A couple of them, it was more significant, and they were already looking at a couple years out. Especially if they're looking to sell their business. This is not the time to go selling your business, right? So a few of them have willfully basically said, you know what, I'm going to wait for better time on that. But again, it just depends. So this is, I'll support people who do work like I do, and echo Jamie's opinion about working with financial planners who do planning. The reality is that if you already had one of these plans in place, a very nervous conversation with a client could have become a very easy conversation. A lot of the feedback was, okay, I'm still good. This is fantastic, right? And then they could just go back to worrying about the business itself. That was kind of the best blessing I could have given them. The ones where it wasn't necessarily going to be as good a picture, we would run plan updates. And I would, again, affluent client base, largely, most of them are pretty close to okay. But, as a business owner, you understand, again, these the peaks and valleys, right? You know that if one of these things happen, it's probably not the time to stop working necessarily, unless you're really, really privileged.
Right. So Brandy, I want to ask you, are there any changes or shifts that you've made to your company, or maybe ones that you expect are going to last after this pandemic that you might not have made beforehand?
Well, we are offering obviously services around COVID now about back to work and planning for the second wave. So we shifted the services that we offer, but wasn't too far outside of obviously the public health. I think, like everyone, we're just looking at new ways of working with our clients. So we've been so used to a lot of our face-to-face and also just the way we do. One of the biggest things that has changed for us is we do really big engagement. So we do focus groups and we travel. And so that big piece has changed. But I think I'm really blessed to have a good business partner too. And one thing that I was talking with my financial advisor before this, just to kind of talk about some things that were of interest. I think I've been really blessed to have a good business partner who also is really financially secure. And I think that's really important when you're looking to start a business. If you want to get loans or capital, you have to make sure your business partner has good, because a lot of the stuff you do you personally secure, right? So a lot of the finances that you do for a company, there's personal security. But I think for her and I, it just made us realize how volatile, like I know we talk about this roller coaster of being an entrepreneur, but I don't think anyone plans for something like this where everything just stands still. You plan that you have a bad client, or the project doesn't go as, or you don't get something you bid on, but you don't plan for something like this deep. And I think this is where, and it was a really big part for us to keep our team together, because I think that helped us come out stronger. And I think we've just been, I wouldn't want to say we're naive, because we were good entrepreneurs, but I think we were a little bit naive in the sense that anything can be pulled out from under you. So I think just planning for that, which we didn't. So we didn't have that money in savings. We didn't have all those things. We never planned for that, because we thought, oh, well, we go up and down. But I think that's a big thing for people to think about. And I don't know what the standard advice is, but like, do most companies have money in savings? I'd say no, especially new companies, right? So I think that was a big piece for us as well.
Well, even the big companies don't even have money in savings, right? We're seeing the big companies, especially in the US or even Canada. Air Canada just got a big bailout, right? Mm-hmm. So, yeah, I'm sorry, I just wanted to add that because...
That's great. So Vivian, I want to stay on you for a second, because, you know, as Brandy was just saying, you know, the pandemic does give you an opportunity to sort of reset and rethink your approach to your business plan, or even some life decisions. So I'm wondering, you know, are there any, you know, calls to action that you want to put out there around small business and financing, especially for female entrepreneurs?
Lean out. So, you know, over time, you know, your business gets bloated with either, especially if you're in the e-commerce space. I'm specifically on the Shopify platform. So, you know, delete apps that you don't need, that you haven't been using, that aren't, you know, making you money right now. Lean out your products, so your SKUs. So I know for myself, I'm focusing on products that are moving. Since a lot of my customers are moving to Zoom meetings, I'm pushing products that are Zoomable, right? So I would say to clean up your back ends, take this time to, you know, to get rid of the slow moving product and don't bring them back, and to focus on the things that is working. Those are the two things I would suggest.
Great. So I'm going to jump over to some audience questions. We still have a couple more things to touch upon with our panelists, but I want to make sure we get some audience questions in. And one of them that came in, and I'll see who can answer it. Maybe you take turns jumping in. I know it's a little bit different when we're on a webcast than our regular panel, but you know, what should a small business owner expect to pay in HR, legal, accounting, advisory services as a percentage of operating income? And I'm wondering, maybe Brandy, you can start us off, because I know you were mentioning that you do have those type of services in your business.
Yeah, I don't have that number off the top of my head, I can tell you. But if somebody wants to start, I can actually pull that up really quickly and give you an idea of what we're looking at.
Sure. Jason,
I've seen it all over the map.
What are some ranges?
It depends. I mean, like, there are some high turnover businesses, more litigiousness, right? I mean, as a range, like, it should definitely be in this low single digits. You know, this should not be a major line item. However, if you go through like a major mergers and acquisitions piece, or you get into a lawsuit, then that number can skyrocket, right? So I would say, yeah, low single digits is kind of status quo. Everything's going okay. But you know, again, something happens in the business, and good or bad, and that number just shoots through the roof.
I think it's important that people get value because, you know, lawyers, depending on the city, they can be $1,000 an hour in downtown Toronto, right, for specialty tax work and things like that, right? But at the end of the day, you've got to make sure that you're getting the value from your professional. So if you're hiring an accountant to, you know, prepare an application for the wage subsidy, you know, look at what you're getting back, look at what you're paying on an hourly basis to your accountant, and say, look, is there a cost benefit here? Same thing, if the accountant's just doing the tax return at the end of the year, is the accountant providing you with advice? Hey, here's some ideas. I have other clients that are doing X, Y, and Z using these tax opportunities. How come you're not doing that? So in other words, you want your professionals to be proactive, not just reactive. Of course, if you're dealing with a lawsuit, you're getting your HR firm involved, lawyers, then, that's a whole other story, right? Litigation is very, very expensive. But I'm talking about proactive advice, both on the legal side, on the accounting side. You should be getting value. So whatever you're paying, you should be getting more back from it. Otherwise, I would look for somebody else.
I just pulled it up. So we spent about $10,000 last year on, that's all our professional fees. So our legal, our bookkeeping, our accountant. And we have an HR lawyer, a corporate lawyer, a professional accountant. And then we used to have some bookkeeping support. But we do that all in-house. And I find it really minimal, especially considering, as you mentioned, the value of, like even in this example, the value of the advice from the HR firm was huge. And it was all free advice because it was to their clients, right? So it was pretty minimal for us last year, considering how much support we had. And even through this pandemic, the conversations are quick. These individuals are having these conversations 15 times a day. So reaching out to a HR lawyer or a financial advisor, an accountant right now, they're not going to have to dig. You're going to have a question. Can I get subsidy? Can I do this? What should I do? They'll be able to answer it really quickly for you because this is what they're doing all day, every day. So.
Great. When we're talking a lot about the government grants, one of the audience members have a question around where else, like what other methods can entrepreneurs look to seek leverage in these times of crisis, including venture capital and crowdfunding. So any of the panelists have any opinions or perspectives regarding these two options that many are looking for?
Good luck in the VC space right now. There's a lot that's been pulled back. I know plenty of people, and I have a podcast on fintech, so I know plenty of people in this space. And if you're in a fundraising round right now, good luck to you. It's not going to be easy. Peer-to-peer lending, there are a couple of platforms for that in Canada. Spoke to one of the founders recently. He says business is still good. So there's a bunch of alternative new age tech lenders that are worth looking at. I mentioned vendor financing on receivables more than once. That is definitely an area that most people do not monetize. That could be monetized, especially if you're on a e-commerce platform. But the reality is, and here's the thing: there's one of the things people always talk about with incorporation is protecting your personal assets from the corporation doing poorly. The reality is that you're going to have to sign guarantees, right? So signing the guarantee, you may as well, at the same time, take money out of your mortgage and put it into the company. What it comes down to is, if you need this money, what is the realistic prospects for what's going to happen with your business going forward? Are you throwing good money at your bad? Or are you basically legitimately going to recoup this business and recoup the money that you're doing, whether it's borrowed or self-generated?
Sorry, go ahead.
Sorry, yeah, and I think something we talked about, previously as well, is looking at whether your business, what your business is going to do during this pandemic and after, right? So, there's some businesses that are thriving, obviously, because their service is more needed, or they've pivoted and they've come up with services to support this global pandemic. But I think it's the idea of what's going to happen now and in the second wave for your business, even hair salons and restaurants, are they going to have to reclose? I think that's a really big piece of looking for that money.
Right. I was going to ask if either of the business owners have ever used a peer-to-peer lending platform when they were starting out or through the pandemic.
I've used ClearBank.
I actually have.
Oh, ClearBank. Okay.
Yeah, I've used ClearBank.
Yeah.
Shopify announced back in, I believe, in May or early June, time is all the same, that they're also dropping a Shopify Capital, which is an e-commerce lending model. ClearBank helped me get through a tough spot late last year. But yeah, it's there. It's there if you've got commerce, or you've got revenue coming in. Options like ClearBank or Shopify Capital is there.
Great. So Jaime, a question came in for you around what these strategies, such as the wage subsidy, the rent assistance program, interest-free loans, would any of these have tax implications to the business owners?
Yeah, so they all do. Each one is a little bit different. So obviously, if you get a wage subsidy, that's going to be income to you as a business owner. So you include that in income. But remember, you're also paying a wage. So you're offsetting it, right? So in other words, if you're getting a wage subsidy, you're paying the wage at least that much, if not more. Maybe not getting a full subsidy. It's a 75% with certain dollar amounts. So generally speaking, that financial assistance is going to be taxable. But again, you're getting an offsetting write-off. The $40,000 loan. Ultimately, this is a loan, right? So you pay it back, you're fine. And the $10,000, when it's forgiven, that would also be taxable if it's forgiven, if you meet the conditions by the end of 2022. So yes, there are certainly tax implications of all the government programs. Again, worth checking with your accountant to make sure that you understand for that and plan for that.
Great. Brandy, this is a question for you. I think it's a great one when you brought it up. Someone wants to know how they can access the student grants because they're so frustrated trying to access the government sites.
Yeah, so we just Googled, literally we've been Googling, we've been looking at all the different services we offer. So public health, creative services, tech services. So we're trying to bring in new coders, new designers. So we've been Googling all the different grants that are available. And we've also, there's a couple where we don't quite fit the criteria and we've reached out to them and asked them if they would stretch it. And a lot of them are saying yes. So we're putting in our application. So it was really just a deep dive to what's out there. And if there's specific questions that I don't know the industry, we've been looking specifically in the creative field and the tech field. Those are the two we have. So I can provide that links to you after if it's helpful.
Mm-hmm. That's good to hear that even if you didn't have all the check boxes for the grants, reach out anyways, because you're not sure, they might not have anyone applying for them and they'll extend those parameters.
Yeah, and they've done a thing where it's like a student thing, but if the individual has graduated and isn't going back into school, they're doing a lot of flexibility there because of the idea that these students are going into this horrible job market. So I heard another group I was talking to, they're like, please apply for this one coming up because no one's applying, because no one's thinking about bringing on new people. Same thing with the wage subsidy. We were like hiring people, like, why are you hiring? We're like, well, if we can get through the next 3 or 4 months with no problem, someone's helping support that individual, right?
Mm-hmm. For Jaime or Jason, or maybe even one of the business owners that might have done this, can a parent put money into their child's business, or does Revenue Canada say no to loans or gifts from a family member, no wages, just capital contributions?
Well, I think anyone can help finance a business. Yeah, sure. I mean, like if a parent wants to help a kid with the business, absolutely, you can make a loan to the business. There's no problem with that. So there are certain rules in terms of complex corporate attribution rules and things like that. But certainly if it's done properly, it's a big source of financing for many business owners is loans from family members, right?
Great.
Yeah, especially if it's personal money going to a adult child, then pretty much there's like nothing to even look at, just to make that contribution.
Right. Jason, just to stay with you for a moment, a question that I still had here was for entrepreneurs who, might be in different financial situations, whether or not they should tap into personal finances to support their business. Some of us have touched upon that. But, what is usually your advice if someone wants to start bringing their personal accounts and their retirement savings into the business, especially on a downtime?
Yeah, I mean, it's first off, it's down markets are always a bad time to sell anything off. However, I would say this much: if you were properly diversified as of right now, you're probably not feeling much of a pinch from the beginning of the year, quite honestly. And I'll echo the last time Brandy addressed this. What are your prospects for the business, both during and after COVID, right? If you're going to, it doesn't matter what the source is, if the patient's on life support, what odds of it's surviving based on the infusion of whatever you're going to give it, right? And if the odds are slim to none, then that's probably not a good idea, especially if you have not signed personal guarantees for anything. And sort of say many businesses will not recover from this. However, if you are in a business where, okay, I need to just kind of stay at a sustenance level to keep this thing going until it gets out, because there's always going to be demand. There's always going to be demand for people to cut my hair, like guaranteed. Like that's just the example we put. Always going to be demand for restaurants to some degree. So a lot of this is right now just survive. If the prospects for you surviving and flourishing afterwards and not putting yourself in an irreparable hole are good, then by all means. If not, then you got to kind of face the fact that whether it was COVID or something else, something stopped your business from working, and maybe it's time to move on.
Great. So I know we're getting closer to the end of our discussion here today, but I want to give everyone an opportunity on our panel to sort of give what they feel is, one piece of advice that they'd share with small business owners as they try to weather the pandemic. We've touched upon that we could potentially be going into a second wave. And even if we talk about here in Toronto of hairdressers and patios opening tomorrow, hopefully the rain will hold off for those patio goers. But, what advice do you have as we're not close to this pandemic being over? So, and I'll start with you, Vivian. What would you give them as sort of advice right now?
Just as Jason said, if you can weather the storm, weather the storm. Like, just keep afloat, do what you need to do to keep your business afloat. But in the meanwhile, if you've got to pivot hard, pivot fast. If you haven't done that already, there's still time. That would be my advice.
Brandy?
I guess it's just echoing a lot of what I've said already, just really leveraging those professional relationships that you have. And even Vivian, hearing you talk, it's really good, I think, to reach out to other entrepreneurs. There's a lot of the conversations we've had, even completely different sectors, restaurants, consulting firms, we've just connected with each other. There's lots of great forums out there. So connecting with other entrepreneurs, people are coming up with great ideas. So just really keeping the conversation going, not putting yourself on an island and trying to put your head down and drive through the wall. Just really look out who's out there professionally, who's out there as other entrepreneurs, be part of the conversation. And then I think it's that idea of if your business was good going into this, I feel like we'll come out of this if you're really smart about it.
And Jaime, in your final words, I want you to also address, because I know when we chatted before, you said something great that was about people's need to adjust your expectations for the new normal. So maybe you can talk a little bit what you mean about that, and then share some final thoughts on advice.
Yeah, so I think you really want to look at your business, and you may have to operate your business differently for months and if not years to come, right? Depending on the type of industry you're in. So the new normal could, really involve social distancing, and depending again on type of business, capacity for a restaurant, things like that, waiting times to get into elevators, to go up office towers. Like, this could really be a new normal, and this could go on for a while until either there's a vaccination or some kind of cure. So this could be a while. So you want to look at your business, depending on the industry you're in, make sure you're adjusting to that new normal. And again, I think as Brandy said very, very clearly, get advice. There's a lot of people out there with a lot of information, with a lot of great advice to really make sure you're taking advantage of all the government programs. So either sit down with your financial advisor, your banker, your accountant, your lawyer, someone who's literally done this for hundreds, if not thousands of hours already since March the 13th, and really understands what's available to you to make sure that you are taking advantage of all the opportunities, not just in government support, but in terms of other tactical things you could do from a tax perspective, financial, debt, leveraging, cash flow management.
And Jason, your final thoughts on that, and maybe you can also give some advice to business owners, and maybe just if they're starting off fresh, they might not even have some of these networks of financial planners and advisors, or maybe they're not at the quite level. Where can they go to find that type of help? Beyond even their branch, if they want to seek, maybe a fee for service financial planner or the sorts. Maybe you can give some thoughts on that too.
Sure. So I'll start with that and just give a lot of advice to the business owners about this period. So a couple of places to look for credible financial planners. I would say the FP Canada website. That's a directory of all CFPs, certified financial planners in the country. The IAFP website, the Institute for Advanced Financial Planners, RFP is designation there. And then the last one I will support because I actually helped start it, but the Financial Planning Association of Canada, where planners subscribe to a fiduciary responsibility as directory members there. And this is not a just hire one and be done with it. Interview, take the time to make sure you're making the right decision. Find the right planner is a relationship that you could have for a massive chunk of your life. So basically take the time with that. And then in terms of one last piece of advice I will have is that look at this potential down period between two waves as a blessing. One of the things that happened, because this was not quite out of the blue, but pretty close to it, was that there was not this run-up period where people could have said, oh boy, I'm not going to be able to get into my office. I'm not going to be able to open the doors. I'm not going to be able to do all this. And, we all thought we were going away from March break and we couldn't come back to the office, right? Look at this period as your opportunity to to create a work from home environment and support all and leverage everything you possibly can. If you got to get all your files scanned in by a professional scanning service, get it done fast. Do what you can to continue to build online sales if you're in that space. Now, make modifications to the physical space to allow for people to socially distance. Like, this is your opportunity to get ready for the flood again. And if you don't take it, you're going to find yourself in a worse position because you had the chance. Exactly.
Great. Well, I want to thank each of you for taking the time this afternoon to give us some great takeaways on small businesses and finance. I want to remind the audience this afternoon that you'll all receive a link to view the recorded version of this webcast in about a week's time. And I should also mention that the third webcast in the Rebound and Recover series will take place on July 9th. And this one's going to focus on skills and hiring for small business owners. And we're going to be discussing how small businesses can bring back their staff and re-engage their workforces. And you can register via the link on the slide that you see in front of you now. Once again, I'd like to thank all of our speakers for taking the time to share their insights and all of you for listening. I'm Claire O'Hara, the business reporter with the Globe and Mail, and I hope you all have a great afternoon.
Thank you.